Welcome to the RedChip Virtual Conference.
All right. Hi there. My name's Todd Hanas. I work with Athabasca Uranium. I was the founder of the company and currently do the corporate development for the company. Athabasca Uranium went public in June 10th, 2010, back when uranium was $40 a pound. And since then, we've been able to acquire over 60,000 hectares, all on the sweet part of the Athabascan Basin. When I say sweet, meaning where 80% of the discoveries and deposits are in the basin, with all of our properties surrounded by Cameco, Denison, and newly formed Rio Tinto, which took out Hathor in November of last year. So we're quite excited about our real estate. We've been able, within the 2 years, to acquire a property, our number one property, the Keyflake property, which had $3 million spent on it, and more importantly, 2.5 years of exploration, which was able to leapfrog the company from its 2-year status to 2.5 years ahead of the exploration model. And the property had close to $3 million spent on it, and after the Fukushima disaster, we were able to acquire that property for less than $500,000, and within 6 months we were drilling. And on our very first hole, we hit uranium. It was quite exciting. And what we're doing right now is we just finished our Phase 2 drill program and plan on getting results back next week, actually. And the company right now is sitting in a situation where we're very excited about the drill program, because what we tried to do as a company was to mitigate the risk as much as humanly possible by following a proven leader. The leader that we're following was Hathor Explorations. It's pretty much the largest story in the Athabascan Basin in the last 20 years, and they were able to do what nobody else has ever done before in the basin, and that was hit 70% on their drill program as far as successful holes. Hathor, people don't know this, but Hathor, the Rough Rider, which was recently bought out by Rio Tinto, was actually owned by Cameco, and Cameco had drilled over 200 holes on the property and never hit anything. And they decided to drop the property, and what Hathor did is they went in there and acquired the property, and they were pioneers in bringing in seismic to the Athabascan Basin. I'm not sure if everybody knows what seismic's used for, but generally it's used in the oil and gas industry to find oil and gas. And what they did were, as pioneers, is they spent $1.7 million on seismic on their Rough Rider deposit, and about $1 million on airborne and groundwork geophysics, and started drilling and actually hit on their 12th hole after Cameco had spent about 4 years and missed on 200 holes. What's exciting about that is they stopped drilling, and everybody was wondering what the hell they were doing, and they went back to the University of Saskatchewan and took the core from the hole they hit on, and they correlated the core to the actual seismic data on the property, and they ended up raising $20 million in the process through a roadshow with different analysts coming to the University of Saskatchewan's 3D seismic room. And they raised $20 million. They went back out after correlating the actual seismic data to the core, and they drilled 250 holes, hitting on 70% of those holes. That is unprecedented in the basin. The Athabascan Basin is a very interesting spot in the world. There's a lot of theories to how the geology works, because there is no real indicators in finding uranium, not like gold or silver. So what they did is very unprecedented. To give you an example, Denison, which is one of the largest companies in the basin, and to their credit, this technology was not available, or they did not know of it at the time, but they spent 8.5 years on their Midwest deposit, which is comparable to Hathor's Rough Rider. It took them 8.5 years. They drilled 900 holes, and they missed on 600 of those holes. So it's quite interesting as to which is better, spending the money on seismic or drilling the holes. Well, obviously Hathor proved that the seismic and new technology that is changing exploration around the world is working, and it's working extremely well in the basin. Since Hathor brought in seismic, Cameco has used it, Areva, the French government, has used it, Hudbay Minerals has used it, Mega Uranium has used it, and you know, Hathor had used it again on their Russell properties. They spent $5 million this time. So what we've tried to do is be good students and follow a proven exploration path by replicating Hathor's exploration program at the Rough Rider, not only using the same science, but bringing in the same people. If you look at and do your due diligence on our company, you'll see Dr. Zoltan Heinout from the University of Saskatchewan has now joined our advisory board, and he is running our exploration program out of the University of Saskatchewan, and things are looking really darn good. And for us to hit on our very first hole was very encouraging, and to have Dr. Zoltan Heinout join our advisory board was very encouraging as well. So
Todd,
where we are right now...
Todd, if I may jump in real quick, I don't know if you've advanced the slides yet, but we're still on slide 1 here.
Okay, sorry. I will do so. I'll go through this quickly with you right now. Athabasca Uranium, all of our properties are in the Athabasca Basin. All of the properties their targets are under 300 meters deep, which makes all of these properties an open pit scenario. Like I said in the past, all of our properties are surrounded by either Cameco, Denison, or Rio Tinto, the 3 largest players in the basin. We trade on the Toronto Venture Exchange under UAX. We also trade on the OTCQX under ATURF. The board of directors and management team and advisors to the team are second to none. We're quite excited to have Gil Schneider on our board. He actually owned the company that did all the seismic work for Hathor, and watching all these junior uranium companies using his seismic company and finding all these discoveries, Gil decided to go onto the other side, and he's the one that originally brought us our first property for the company when we did our qualifying transaction to go public. And since then, in the last 2 years, we've been able to, like I said, obtain 60,000 hectares of property, 60,000 plus, raise $7 million, and start and finish our second phase of drilling, all within the last 2 years, even after the Fukushima disaster. Another thing to note is all of our money was raised when uranium was trading between $60 and $70 a pound. And all of our acquisitions were done between $40 and $55 a pound. So we've been able to capitalize on the rise and the fall of uranium, and we're quite excited about where uranium is right now because it makes for an excellent investment. Not just our company, but uranium in itself. Bringing on Barry Lee. Barry Lee has a very good track record. He's worked with some great companies. He's done a lot of M&A, and we're quite excited to have him back. And Dr. Peter Bourne, he is a driller, and he's worked in the uranium space. We're very excited to have him and his knowledge. Stephen Brook is good in the capital side. He has raised a lot of money in the past, and he knows a lot of very solid people that could help us raise money in the past and in the future. Kim Goheen is a very interesting person we just brought onto the board. A year ago this time, he was the CFO and Vice President of Cameco, world's largest uranium company in the world. He's never worked with a junior company before, and he decided to come work with us as he likes our properties, he likes the company, the structure, and he likes the uranium space and where it's going. Dr. Zoltan Heinout, as I spoke about, he's an amazing person. He is the ideal scientist. If you were to picture a scientist, it would be Dr. Zoltan Heinout. He's been very successful in working with seismic in the basin, and he is the guy as far as working seismic in Saskatchewan. Everybody at Cameco knows him. He's known throughout the industry in the basin, and we're very excited to have him on our board, and it brings a big boost of confidence as he's very excited about the company and our drill program. Tom Drolet, a very interesting person. He speaks at all the different trade shows, and he has been very good in bringing in sovereign funds and different contacts. And we are working right now on our other properties to joint venture our other properties. And things are looking very good, and we have been working with a couple of Chinese groups now for over 3 months, and things are starting to heat up there. I'll switch the page here. Supply crunch is coming. In the uranium space, it seems like every 3 days there's a new story on uranium. The simple facts are is the supply and demand factor, as it says in our slide. In 2010, there was 118 million pounds consumed, while there was 118 million pounds. Sorry, 1 second here. There was 118 million pounds produced, while there was 190 million pounds consumed. The simple facts are this is not getting better, it's getting worse. At the end of 2013, the Russian-U.S. disarmament program comes to an end. That is 14% of the world's supply coming out of the market, which currently the United States relies on 8% of that. Cameco right now is raising $1 billion, and Rio Tinto, another major, has come into the basin, which is very exciting for us and other juniors in the Athabascan Basin. The word on the street is that Rio Tinto is not done shopping, and also that Cameco is looking for some strategic takeouts in the basin as well, now that Rio Tinto has entered and taken basically Hathor over. So it's a very exciting time for uranium in all. I mean, we are at the bottom of the curve, and things are looking very exciting as far as getting involved in the uranium space. When you are buying Athabasca uranium, you are buying the bottom of the uranium curve. So things are really starting to heat up with China, India, Korea, France, Japan now is restarting. So there's a lot of very good indicators out there that uranium's here to stay and going a lot higher. Like I talked in the beginning of the presentation, we have decided to use the latest and greatest science available and to follow a proven leader, and that's Hathor, and basically follow the steps of success. And so far, after our first phase, we had very good results. We do have a few large companies that want to come to our camp after our second phase drill results are out, which will start next Wednesday, and look at the core. Keyflake Project, which I'll get to the slide right now. Actually, I'm going to stop here and look at our exploration projects that we have. We have the McCarthy Lake property, which was our #1 property prior to grabbing the Keyflake Project. Currently, we are, like I said, we are working with 2 Chinese groups on a joint venture situation on this property. This property can be drilled within 6 months. It's got some very nice targets on it. And like I said, it was our #1 property prior to grabbing the Keyflake Project. And then as we go down, you'll see the Keyflake Project. The other interesting thing about this, you can see it's touching with Denison and Cameco surround the property. Well, this property is not only very interesting, the fact that it's had $3 million spent on it, and almost now 3.5 years of exploration on the property, but it's 29,000 hectares, and as you can see, it's a pretty big chunk of land in the right part of the basin. And we have had interest from other sovereign funds that are working with other juniors in the basin right now, and so it's quite exciting. And then if you look at our McGregor Lake project, it is right beside Denison, right beside the Moore Lake deposit. It's actually 4 kilometers from the Moore Lake deposit, which is the largest low-grade deposit in the basin. And then our Key East property, which is connected to now Hathor, but now Rio Tinto, their South Russell project, it's very interesting as well. So all of our projects in our 60,000 hectares are in the right space of the basin. And when I said earlier the sweet part of the basin, as 80% of the deposits and discoveries in the basin are in this general vicinity. Switch to the next one. If you notice our Keyflake project, like I said earlier, $3 million spent on the property, 2.5 years worth of exploration. We're currently drilling where the K1 targets are. It's 12 kilometers from our McArthur Lake mine, which is the richest uranium mine in the world, with 200 million pounds currently produced out of the property, and a lot more coming. What's interesting about this property is the property's never been drilled on, and for us to hit the alteration that we hit, and to actually hit on our very first hole, it's brought a lot of attention by other companies in the basin. And it's very exciting because they do want to see our properties, and that's always the first start of either a takeover or a joint venture. The property itself, we've now finished our 10th hole on the property. We have results on 5, and this Wednesday we should start, hopefully, get our first results out, which will be on Wednesday, June 20th. And we've also drilled on what's called our Ballhofer Lake, which is the K2 targets, which were all even shallower. They're between 100 and 150 meters deep, and we're waiting on results on those as well. So it could be very exciting times for us right now. And I'll move down here. The McGregor Lake property, as I was saying, it's 18,000 plus hectares, right on contiguous, on trend. The property itself was 3 projects that we combined together that we did acquire between 40 and 50 bucks a pound. We're very excited about the fact that Denison has spent a lot of money, and last year they did a big drill program on the property, and they've told us they're definitely going back. They never told us the results, but they told us they're going back, which is always encouraging. And I'll switch to the McCarthy Lake property. This was our qualifying transaction. As you notice, it's surrounded by Cameco and Denison. And the property itself, we did what's called a VTEM over the property, and there was previous work done on the property. And we have some very nice targets, and with about 6 months worth of prep work, we could be on that property drilling. This is our #1 joint venture property, and we're quite excited about possibly working with either one of these Chinese groups that we're currently in talks with, because they're very excited to get into the basin, and they have set up camp in Saskatchewan looking to get involved in the basin. The East Key Lake project is interesting as well, as it's very close to the Key Lake mine, which is run by Cameco, which has produced over 200 million pounds to date. There is a mill there, and we are butt up right against Rio Tinto now. And we did fly some VTEM over that property as well, and it's exciting in the fact that all 4 of our properties have some exciting targets on the property. And when I talked about real estate, the reason we decided to get into this part of the basin was, first off, because of the shallow targets involved, and because of the neighbors that we have. It really doesn't get much better as far as real estate goes in the basin. I'm going to talk a little bit about the Athabasca Basin and why it is so attractive to the world. First off, it's located in Canada, in Saskatchewan. It's in the northern part of Saskatchewan, and it's in an area, I mean, obviously Canada is a very safe place to do business. The Saskatchewan government is extremely positive, and they're very good to work with, and they are moving ahead and speeding up their permit process in regards to starting to actually produce out of their province. And it does supply, the Athabasca Basin, I don't know if people know this, does supply 30% of the world's uranium. The largest producing mine in the world is in Australia, which is the Ranger mine, and it produces at about 0.5%, where the McArthur River mine is the richest mine in the world, and it produces, it has an average head grade of 23% uranium. So it's a huge difference in the fact that uranium is very concentrated and dense in the basin, and you can literally, when drilling, miss it by 5 meters. And so it's very exciting for us for where we're at with our Keyflake project and the results and the indicators that we're getting right now and to have the larger companies in the basin very interesting in following our exploration program. Jim, I'm not quite sure where I should go from here, but maybe just talk a little bit about our capital structure. As you can see, the shares outstanding right now are 52 million. Our current cash position is approximately $1 million as we speak. The company options are all between 10 and 25 cents, and the warrants, since Fukushima, all of our warrants have expired. So the only warrants we have left expire on March 2013, and they're at 45 cents, which is good and bad because warrants are always a good financing. There's no corporate finance fee involved, but point I'm trying to make is there's no real overhang in the market, and if we get one sniff of uranium, I think the stock price could do very well. Currently, the company sits with a great share structure. Fully diluted is 58 million with another $3 million in the till, and we're hopefully going to hit on this next run and see the stock price move. We're trading near our all-time low. The company's last financing was at 38 cents back in March of 2011. Actually closed it the day after Fukushima. And since then, the stock has steadily declined with uranium prices, and uranium's currently trading around $51 a pound, with larger firms like JP Morgan putting targets of $85 by the end of 2013. And near-term targets of $65 a pound by the end of the year, which is very exciting for us. Prior to Fukushima, uranium went from $40 in June 2010 in 7.5 months to $73 just prior to Fukushima. With Fukushima, people understand. I mean, it was a major disaster, but the reason people are listening to this webinar right now is because they invest. And uranium has become an extremely attractive target for people to invest right now. Simple facts is uranium is going higher. There's all the indicators are showing that. All the analysts are saying that. And to me, buying uranium right now is like getting gold under $1,000. It really is. The facts is the supply and demand issue is there, and there's simply not enough supply for the demand, and it's getting, like I said, worse, not better. Jim? I don't know if you have time for this.
Does that conclude the presentation there, Todd?
I'm pretty much done with the presentation, yeah. If I'd like to bring on any questions, or if anybody has any questions on the company, be great.
All right, we'll jump right into Q&A here. First question, can you please go over any resource or reserve estimates on your properties? And if you don't have any, when would you expect those estimates to come through?
Well, we're very early in our exploration program. I mean, we will not have any resource estimates. We've only drilled a total of 9 holes on the property. But the exciting part is these 9 holes that we've drilled have put us in a situation where the big companies do want to look at us and check out our core and come to the actual property and do a site tour. We are in the early stages, and we are going to have to drill quite a few more holes. But this is the time to get involved with the company. I mean, Hathor in a 5-year span went from 30 cents to a $4.75 cash buyout by Rio Tinto in an extremely poor uranium market. So and what we are trying to do is replicate their steps, and why not? So. Any other questions?
Todd, next question. Absolutely. Is the end game for Athabasca Uranium to reach production, or is it really to be sold to a major or work as a JV?
Well, basically, I mean, yeah, our Keyflake Project, I mean, is our #1 flagship property, and the company will never go into production. We are doing what the majority of juniors do in the basin, is raise the money, do all the risk work, build a resource, and then sell out, hopefully, at a much larger price to the majors. And that's kind of the role in the Athabasca Basin. And that's why it was extremely exciting for when Cameco and Rio Tinto were bidding for Hathor. I mean, we were going for Rio Tinto because Cameco is, they basically own all the major deposits in the basin. And for Rio Tinto to come into their backyard and grab the largest and best deposit right now in the basin was very exciting for us, because now we have two majors to work with in regards to being bought out.
Great, thank you, Todd. Next question. Can you give some color into the metrics on buyouts? You know, what majors will pay for juniors and how they place a valuation on junior uranium companies?
Well, basically, I mean, every company's different, but basically what they do is they look at the size of your resource, and they look at your resource, and they look at the time estimates as to how you're going to get it out of the ground and when it's going to come out of the ground. They look at your costs of getting it out of the ground. Like with Hathor, they had come up with an assessment of $15 a pound to get it out of the ground. It's still 5 to 7 years away before they'll start producing from the Rough Rider, but it was in a situation where, you know, Cameco needs the pounds in the ground, much like large gold companies acquire ounces in the ground. But it's all metrics basically. It's if it works well for the company, and the Rough Rider is in a good spot in the basin. It's in what's called the sweet part of the basin, and it's very attractive when you look at the resource they have. I mean, the Rough Rider deposit is about 45 million pounds, and it's on a property no larger than 2 football fields, and it extends. So it's a very exciting property.
Thank you, Todd. Next question. How well will your current cash position, I believe you said it was around $1 million, how well can that fund your current drilling programs?
Well, what we're doing right now is we are waiting on results, and what's going to happen is we will build our phase 3 drill program based off the current data. And we did what's called a SEM log also after this drill program. We did this SEM log on our deepest hole, and it's new technology as well. And we've now got all the data, and we should bring it out starting next Wednesday. But what we'll do is we'll send all the data back to Dr. Zoltan Highnout. He will retool the seismic now with the core that has come back from our drill program, and he'll take the SEM logs and he'll correlate the 3 and come out with a large drill program, phase 3 drill program, which we feel, based off our geologists and Dr. Peter Bourne, that we're on the cusp of a very large discovery. In particular, being right beside the McArthur River mine, and our core looking extremely similar. Our clay composition results, which are called PIMA results, are coming out, and they're very, very interesting. And the core itself has been very exciting. We've had some great readings, radiation readings, and now waiting on the second phase. It's very exciting times for us. So the $1 million we have right now is fine. Our current burn rate is approximately 45 grand a month. That's rent, consultants, everything. When we're drilling, that things change. We pretty much all of our drill program is done through consultants, so we get what we pay for, and we like that. So when we're not drilling, we're saving cash. And we probably will hit the finance trail after we come out with a phase 3 drill program. So
great, thank you, Todd. Next question here. I know you touched on this earlier and stated that the seismic technology was much more accurate, but can you give us some indications on why it is so, and where that technology is going to move in the future?
Well, seismic has definitely changed the way people are doing work in the basin. Currently, we are the only junior in the basin that is replicating Hathor's exploration program by using the seismic. And you know, we were able, and we were very lucky to have able to acquire this property through a landman that we've got to know since our first acquisition of the McCarthy properties. But to spend $2 million on seismic in the shallow part of the basin is was unheard of prior to Hathor. But with the story I told you regarding Denison and their 900 holes and missing on 600 of them, it's proven that technology is changing the way exploration programs go on around the world, and not just in uranium, but in all different classes of exploration. So seismic, basically what it does is it shows us the fluid characteristics of the geology underground. And using that with the core and other airborne and groundwork, you're able to come up with an extremely clear image of the geology underground. I'm not a geologist. I'm not going to pretend to be a geologist, but facts are is what we're trying to do is mitigate the risk using a proven exploration program, and that's all you can do as for management, is basically try to mitigate the risk of your exploration program as much as possible, and then do what you say you're going to do. And that's what we've tried to follow in with Athabasca Uranium since starting the company in June 2010. And we are in a situation now where we've hit on our very first hole, which nobody's done, and we've got some very nice indicators with our clay composition and the core, and we've come to the attention of the largest uranium company in the basin that wants to come look at our properties and our core, and 2 other companies in the basin. So it's put us in a great situation, and not only at our Keyflake project is the science and the seismic and everything that's been done on the property, but the sheer size of the property, we have currently not even explored at not even 5% of the property yet. And we've got a lot of seismic lines still to go through, and we currently, when we started the company, had 24 initial targets. And what happens when you drill and explore, we now have core to work with where we previously didn't have core to work with. So we'll take all the core, much like Hathor did, and we're going to go back to the Saskatchewan 3D seismic room and hopefully come out and with a nice big drill program and replicate what Hathor did and hit on 70% on a large drill program. And that's kind of our game plan. And that's what we'll do when we go back to the financing side of things as well. So we are in the right area. We've done everything possible to mitigate the risk, and we're working with the same people that have proven success. So as far as a financier or people financing or coming into the company, I'm not sure why you wouldn't go with us in regards to where we're at, the timing, and where we are in the uranium curve. This is the bottom of the curve. We have done everything possible to mitigate the risk and make it a smart buy for investors coming into the uranium space.
Thank you, Todd. Next question. How many M&A deals have been done in the basin over the past 5 to 10 years?
Sorry, I lost you there for a sec, Jim.
No worries. How many M&A deals have been done in the basin over the past 5 to 10 years?
Well, there's currently, I mean, they're talking, this is the time to do it. I mean, people don't realize this. Back in 2008, uranium was at over $100 a pound. Since then, it's been all the way down. Part of the reason for the company, Athabasca Uranium, getting into the uranium space is because when I started Athabasca Uranium, I was watching uranium, and I'd always watched uranium, and I always liked uranium, and I'd always followed Hathor, and I watched uranium flatline at $40 a pound for almost 26 months prior to us going public. And I thought, you know, gold was taking off, and I thought, you know, uranium is a good time to get involved into uranium. And for our luck, when we IPO'd the company June 10th, uranium was 2010, uranium was $40 a pound, and within 8 months it had gone to $73 a pound prior to Fukushima, and we were able to raise $7 million with our last financing being at 38 and 35 cents. Since in the last 5 years, there has not been a lot of M&A in the Athabascan Basin. Really, there's been a lot of sovereign funds coming into the basin and taking percentages of companies and their earn-ins. But recently there was Pitchstone, which was just acquired by Fission, which is a small junior, and the most notable would be Hathor, which happened last year, November of last year, when Cameco and Rio Tinto had a bidding war over Hathor. So really, the word in the basin now is that this is going to be an M&A year. There's a lot of mergers and acquisitions. Like I said, Rio Tinto, the word is that they're not done shopping. Cameco is currently raising $1 billion. They're very cash strong right now, and I know they have some targets that they're looking at right now as well. And Fission has been told to be on the blocks, and Denison is looking very interesting as well. I mean, obviously, you know, get the companies while their stock price is low. So, you know, I like the whole uranium space. Uranium, Athabasca Uranium is poised. We're in the right spot of the basin. We're in the right area. We're surrounded by the right people, and we're doing the right thing and by following a proven leader. So we are working on JVs right now and hopefully building ourselves to be one of those M&A targets. So.
Well, thank you, Todd. I think that'll wrap up the Q&A for today. And on behalf of RedChip companies and all those participating, I want to say thank you for taking the time to present your story today.
Thank you very much, Jim. I appreciate it. Hopefully I'll do a better job next time.
You did great. That was Todd Hanas, Director of Corporate Development for Athabasca Uranium. They trade on the OTCQX under the symbol ATURF.
This video is not a recommendation or solicitation to purchase or sell any security, nor does it constitute investment advice. Visit redchip.com for full disclosures on RedChip clients.